Justifying factors. Now we're going to talk about a situation where a client wants to insure a vehicle, maybe an older vehicle, and they want comp and collision. Now, there's going to be two different situations. One of them where it's mandatory simply because they're still financing the car. And the second scenario is when it's their personal vehicle, they just want more coverages. So we're going to use a few scenarios so you could actually understand the difference and you could communicate that information to the client. Simply because they want full coverage, it doesn't necessarily mean that full coverage will be the best coverages for them. So you need to educate them. Now, not only are you going to give them the options and tell them if it's something that we could offer or if it's something that we're not able to offer, you have to educate them and tell them why. So the first thing that I want to review with you is simply that some companies don't offer full coverage for vehicles that are older than, let's say, 10 years, for instance, simply because the value of the car is not as high and it could possibly be low, and they don't want to take the risk because it doesn't make sense for them. They won't justify offering full coverage for a vehicle that's worth $2,000, $3,000. It may cost them more to go through the process of fulfilling a claim, payroll, adjuster, inspectors, versus the actual benefit that they're offering. So in that case, they specifically offer liability and uninsured motorists. Now, it's important for you to educate the client. Now, another scenario will be if a client is looking for full coverage and they're trying to insure a vehicle that's being financed. Now, they may not have an option, so we're going to have to choose a company that actually offers those coverages, but we're going to have to educate them that not every single company offers rate coverages for that situation. So therefore, we have to go with a company that does, and that may cost a couple dollars more than what they wanted to pay or than what they expected to pay. Now, the third scenario is simply educating them on the Kelley Blue Book value of the car and emphasizing that maybe full coverage for that vehicle, if the value of the vehicle is $4,000, $5,000 or lower, is not profitable, is not beneficial, simply because there's a deductible that they're going to have to pay. On top of that, the value of the car is not as high. So if the value is $2,500, $1,000 deductible, they're technically getting insurance for $1,500. It's not worth it. And on top of that, they may pay an additional $40, $50 because not every company offers those coverages, so it doesn't benefit them at all. Versus going with better coverages, and you would sell the uninsured motorist coverage, which offers $15,000 per person for medical payments, $30,000 for all the medical expenses, and it also offers up to $3,500 for property damage to their vehicle. So in this case, the value of uninsured motorists becomes more beneficial than the value of comp and collision, because comp and collision is strictly based on the value based on the Kelley Blue Book. So those are the scenarios that you're going to educate them. So once again, number one, educate the client that not all the companies offer coverages for comp and collision, especially if the vehicle is a little bit older. Number two, if the vehicle is being financed and they really need full coverage, we're going to choose a company that offers those coverages, but it may cost a little bit more than what they expected. Why? Because not every single company offers coverages for that car because of the value of the car. Number three, educate them on the difference between the actual value of comprehensive and collision and compare that with uninsured motorists, and educate them that uninsured motorists benefits them a lot more because it offers up to $33,500 worth of coverages. So not only does it offer more coverages, it offers medical coverages as well, which the comprehensive and collision doesn't. So make sure to emphasize on the difference between insuring a brand new vehicle, which everyone's gonna most likely offer coverage, unless it's a vehicle that's worth $50,000, $70,000, then not a lot of companies are going to offer coverage for those cars either. But if it's a regular car, $40,000 or under, every company is going to offer coverage for that vehicle. But if it's an older vehicle that the value is very low, possibly under $5,000, a lot of insurance companies are not going to take the risk because it could cost them a lot more to fulfill the claim or to cover the claim than what they're actually offering. So they're going to spend more money on the process of taking care of the claim versus the actual benefit of the premium that they're collecting. So it's not worth it for them. So use this concept. It's all about educating the client. Justifying factors are very important. This is how you educate the customer on their situation.